Welcome to this presentation on Forecast 5. For this short video, I'm going to demonstrate from scratch the creation of a new budget. So by selecting New Forecast, we're able to select New Zealand or whichever country, give it a name, determine our start date, financial year or similar there, define what integration we want to include and say OK. This will create a blank forecast in our standard layout, which includes blank sections, sales sections, cost sections, overhead sections, depreciation and other. So how the forecast product works is we can give this a name. From there, what we're able to do from within each of these sections, either add new sections or records. And records are how we budget, so if we have a sales record, we can determine that it is income, separately invoiced income, accrued and prepaid. We can decide which bank account it's going to go into, which currency, and what is the applicable GST VAT rate. We record the general ledger code and similar. And then we're able to do derivatives, methods of entering data. For simplicity and for speed, I will just simply enter $100,000 a month and determine that we get our payments 31 days after that month. And you will see the cash flow, inclusive of GST, is automatically presented. Going to costs, let's just add a simple cost of sales record, call it costs, and we'll do it as percentage of sales. There are many other options, such as stock or similar. We'll just throw in 50%, and we pay that in 5 days. Coming down into our overhead section, we can add another record. This record here could be advertising, and that could be an accrual record. So we recognize accruals correctly and handle that. And so what we will do is set up a percentage of sales, 10%, and invoices will be received every quarter, and we will pay those every quarter, as well as that. So you can see how we handle many variations and styles to make the budgeting system very complete. We have a standard bank account. You can add as many additional bank accounts as you may need. We can specify overdraft interest rates that apply, and we can also add interest rates that apply for credit balances for each account as we create any more accounts that are needed. Making the model complete, we also incorporate the balance sheet. On the balance sheet, we can add fixed assets such as plant. We can model the opening balances, which are entered in here up in the opening balance section, and we can model also purchases, $15,000 of fixed asset, and we'll have a straight line depreciation at 20%. We can factor in loans, so the business or entity borrowing money, and it could be a 48-month loan for $20,000 at an interest rate of 6.5%. You see immediately we calculate the interest due, the capital repayments, and the total repayments. Obviously we're demonstrating with just 1 year, but this could easily run into 15 years if you wish to do that. We have a range of other records that can be used, including capital changes, other assets and liabilities. We also include memo records. And memo records is where we can add many features such as budgeting by KPIs. So we can do KPI, and we can make those 100. And then we can actually bring them in up here in sales very easily by adding a new record and simply doing a function in here called formula or percentage of memo. And the formula could be the KPI times another KPI, or in this instance I'll just multiply it by 150 to show you the power of this. See how we're removing the spreadsheet needs to do these things in there. Additional little bits, an assumptions section. So we can assume sales assumption is recorded as entered, or anything we want to make up for the sales assumptions, or as many assumptions as we need to put into the model. These are available in the reports. So very quickly, we've got a simple model. What I'm going to do inside the 4 minutes we've got here, we'll just add in a little bit of tax. So we calculate our system records to ensure that all our balances are correct. We'll just take out 30% of tax, and we'll pay that twice or 3 times a year as necessary. And there we go there. So there is a large number of other options beyond this. So this is handling in both stock, manufacturing, seasonality with profiles, currency rates, definitions, all of this defined in the system. But let's briefly go to our reports. Let's do a quick show all. So this is the budget. What we're going to do, the show all is going to give us the profit and loss report. It's going to give us a cash flow report. So we can see here automatic calculation of the bank interest, credit and debit balances. We can see our tax provision being calculated, our accumulated profit. We can see our cash position. So we get our bank overdraft and then it's moving into funds, our projected balance sheet and our funds flow report. So other features that we support are such features as what if sales increase 25%, and that gives us all of the reports for what ifs. We also report actuals and variance reports. We provide visuals, sales visuals, graphics, working capital days and similar charts that go with that. Each of this is designed to enhance the output. So this is certainly a tool designed to take away any problems you have with doing budgets in Excel. It provides you a whole range of features and functions that do not exist and allows you to do a complete model. This model is inclusive of the P&L, the balance sheet, cash flow and funds flow, and can go up to 15 years. Thank you for your time.